Save, build a, sound money.
All right, ugly old goat here, and
Welcome back.
This is the new year. We've taken a sabbatical here. I've rearranged all my thinking. I'm going to be doing a lot of new and different things, changing my focus entirely this year, but that's not the focus of this video. We just want to do a read through of, I think, a very important article that I did. Has a lot of information on it. Was written at the end of the year, published on January 2nd, and it's called the Coming Gold Hyperwave: The Why, the When, and the Therefore. So I'm going to be reading through, and I'll be commenting along the way. And again, what we do, we want to invite you to be a part of our group. If you want to become a member of support what I do, there is a membership available that we'll talk about at the end. But this is all free information, and guys, I hope you enjoy it. I have put a lot of work into this, and I think we'll see if I'm right. I think I made a pretty good fundamental analysis, and I think the technical has yet to prove itself. And of course, the key to trading is money management. Now this article is going to likely attract the praise of boomer sound money gold bugs who have hardened hearts against the sole digital age monetary asset innovation, Bitcoin. And likewise, it will be greeted with scorn from the Bitcoin techie crowd, whether they be Bitcoin standard bearers, also known as maximalists. Can you scroll up for me, please?
Yeah.
The crypto world shitcoin minimalists or traditional Keynesians, all of whom have hardened their hearts against gold, adopting the Keynesian mantra that gold is a barbarous relic. And you can read all those links, where I'm not going to go to those links, but this article is full of a lot of links. I think the key here is so ironic that the Bitcoin standard bearers, the maximalists, people that really believe in Bitcoin, they seem to regard gold now as a barbarous relic. I think that's a terrible mistake, and I think they'll be proven wrong on that one. And I think monetary theory will prove right in this thing in the long run. You know, gold has a long monetary history, and it isn't just going to go away. It does serve a different function than Bitcoin, and you need to understand that. And when you do, I think it will be beneficial. I think that gold is the only viable competition to Bitcoin. I think that one of the greatest theoreticians in Bitcoin, Saifedean Ammous, agrees with me on that. He certainly wrote it in his book, The Bitcoin Standard, that's really the only thing that can compete. And again, it's a different kind of competition. It's like Bitcoin has no borders, and that's its great strength. But gold does, and that's also a strength. It's just different. And we don't really need Bitcoin if we had sound money. Bitcoin was innovated because we don't have sound money. So why is it, my question is, gold is viable Bitcoin competition. Why is it that so many Bitcoin techies are opposed to gold, and old school gold bugs are so opposed to Bitcoin? Now, my view is that such judgments are usually tainted by self-interest leading to political implications and consequences. The classic example is from two analysts whom I deeply respect, Michael Saylor and Peter Schiff. Now, these are two sound money advocates, yet it seems almost impossible, an impossible task for otherwise sensible Bitcoin analysts to see gold as viable competition for Bitcoin, or for gold advocates to see Bitcoin as viable competition for gold. Bitcoin techies tend to see gold from the Keynesian view as a barbaric relic, while gold bugs seem to be unable to grasp the concept of the value imputed to Bitcoin, holding to the thoroughly discredited notion of intrinsic value. And again, there are a lot of links here. If you want to find out, why intrinsic value is a myth, there's links there. You want to kind of understand. I think the idea of Michael Saylor and Peter Schiff are great counterbalances, because they really are. They're both sound money advocates. They're great analysts. But I think that they're too focused on what they want than what's really there. And so, again, the markets are going to eventually decide, but I think the marketplace, I think having the two competing standards is really where, in the long run, we're going to be going, especially if we're going to develop sound money in the long run. So is the debate an either-or proposition? I don't think so. And even a cursory look at scholarly material available does not allow for it. Saifedean Ammous, the author of Bitcoin Standard, argues that a return to the gold standard is an effective attack on Bitcoin. Now, they're quoting from his book here, with the increased volatility and availability of a reliable and relatively stable hard money international monetary standard, the incentive for using Bitcoin drops significantly. In a world in which government restrictions and inflationary tendencies are disciplined by the gold standard, it might just be the case that gold's first mover advantage and relative purchasing power stability would constitute an insurmountable hurdle for Bitcoin to overcome. By depriving Bitcoin of the fast growth in users and thus preventing it from reaching a large enough size with any semblance of stability of price. And we're going to get into that later. Again, I think there has to be developments, especially of free market banking, and this was really the subject of my previous article, which I will also be doing a read-through here shortly. Monetary theory does not rule out the return of the gold standard that has original legal jurisdiction with roots embedded in the United States Constitution. It is the original fiat or decreed money of the state with a track record of 7,000 years surviving multiple civilizations. Here's what the Constitution says about money power of government. From Article 1, Section 8, there is, Congress shall have power to coin money, regulate the value thereof, and of foreign coin. And from Section 10, no state shall make anything but gold and silver coin a tender in payments. Now this is powerful, and it's so much so that this is not lost on the Bitcoin techies. They were instrumental in the passage of the Bitcoin fiat money in El Salvador. Now people are going to hate that I'm saying that, but sorry, when you declare Bitcoin as legal tender, it now becomes decreed money. It is Bitcoin fiat money. So we have a logical contradiction here. It's not a paradox, because I think it can be worked out, but I think that we definitely have an inconsistency here, and it's very likely that we've already set ourselves up to follow the same path that the past 3 generations developed the gold standard, which lost its value or stopped becoming sound money over the period of 3 generations. Now, what people always say, everything that happens in Bitcoin happens faster. So, are we really looking at a sustainable sound money movement with Bitcoin? And I think that's something that we really need to look at and question. There's a lot of links here. Can you scroll up a bit? Again, there's an article I wrote, Are Legal Tender Laws an Oxymoron? And then we do know that the introduction has hit some snags, but that's normal. I don't think there's look, I'm rooting for what's going on in El Salvador. I get why they're doing it. And
why? I mean, what do you think? Why do you think they're doing it?
Well, they're doing it because they're tied to the dollar. They don't have their own currency anymore. And when we inflate our currency like we've done with the spending, they have no benefit from it. Their citizens are not getting COVID payments or subsidy checks, just like you're not.
Yeah, and
right.
Yeah, all right.
Okay. But their whole economy is on dollars, so they have all the ill effects of the dollar and none of the benefits. And again, this is a wake-up call, too, because I think this whole COVID bailout is waking up people say, wow, this is really a flimsy, lousy, it's a dishonest thing what's going on. People have been getting paid not to work. This is not healthy for any society or any economy. So, and then here's an old article that I wrote that was written this last year. The case for Bitcoin or gold is viable Bitcoin competition, and it's a fundamental case for gold, and for gold to actually start gaining on Bitcoin. Now, I will say this: I've been bullish on gold since August of 2019. So, and I do think it's just taken a while for this to play out. I do think there's signs that I think we have to go up, above 2,000 before it's confirmed. But we'll get into that later. I do think we are set up for I think 2022 is very likely it's going to be the year for gold, maybe even much more so than for Bitcoin. The political implications of playing the legal tender card. Now, the innovation Bitcoin created a new economic stage for sound money. Fiat money, including the Bitcoin fiat money, replaces this new economic stage with a political stage that plays out on a political paradigm. And this is the fundamental shift. Once we declare Bitcoin a legal tender, now it becomes a political football, which is a lot of people, that's what they want, particularly first movers in Bitcoin, because they want to be close to where the action is, where they get special privileges. Governments and citizens own gold as monetary reserves that hang like an unseen sword of Damocles over the Bitcoin market. Just as avant-garde Bitcoin techies have played the legal tender card in El Salvador, old school gold bugs have the opportunity to play the same card in the legacy markets. Now, I don't think any Bitcoiners have thought of that, but you do have, the central banks do have a lot of gold reserves. The governments have a large gold reserve. People do too. Citizens, particularly in the United States, a lot of these old-time, call them boomers if you want, that don't understand Bitcoin, they certainly understand gold. And they have reserves. And if they, I'm not saying this is going to happen, but if it happens, it may be inevitable that to get the credibility back, the governments will go back to a decreed gold standard. If that happens, Bitcoiners have no right to complain because they've done it first right there with Bitcoin. Bitcoin techies will have no cause to complain. Yet, will they support such measures to restore sound money through legal tender laws they have embraced? Well, I would hope so. If Bitcoin is anti-fragile, and I think it is, such an attack should be embraced. Yet, emerging trends toward Bitcoin crony capitalism, and I will do a read-through on that article because it kind of outlines, I think, a danger. I'm not saying I don't know how we can avoid it. I'm not condemning anybody, because I get it, but the fact is there is Bitcoin crony capitalism going on now, and we're all part of it to a degree. And it's just like, to the degree that I'm collecting my Social Security check, I'm a socialist because one of my mentors, Hans Svanholm, when I asked him about it in my youth, he says, well, just don't collect it. Even though you're paying for it, don't collect it. Well, that's a hard thing to do, particularly when I was completely broke getting out of prison. And of course, I shouldn't have been in prison anyway, but that's another story. Yet, emerging trends toward Bitcoin crony capitalism indicate strong opposition to a fiat gold standard will likely occur from within the Bitcoin community itself. And there it is, an article I wrote, The Disturbing Trend of Bitcoin Crony Capitalism. I don't think Bitcoiners like to hear that. They like to call everybody in the fiat system that's crony capitalism, but not Bitcoin. Well, it's the same thing when you're trying to get a special favor from the government. The legacy system and Bitcoin integration. The current disturbing trend is that the integration of Bitcoin within the legacy Bitcoin within the legacy system. This is akin to the sound money movement shooting itself in the foot. The argument is that regulation is a good thing, or if not a good thing, an unavoidable thing. Entitlements and regulations are not going to go away, so we may as well just embrace them so that we get the right regulations and the right entitlements. And that we can impose those on the market. As long as they're the right ones, the ones we want, then it's okay. This is the problem that we have with the free market. Everybody vocally want a free market. I mean, Murray Rothbard was the worst. He was for a free market, but we're going to impose 100% gold dollar. So we all have our little hypocrisies, and it at least let's confront them and address them. Doesn't mean that we're going to get out of this thing. We're not going to we're not going to have, it's never a perfect world, but that does not diminish what we should be shooting for. It does not diminish the ideal, even though we can't live up to it. The Ten Commandments are not any less valid just because we fail on every one. And I failed on every one, guys. So this, of course, begs the question, does Bitcoin really provide an alternative? Or is it simply a new paradigm, granting a brief reprieve that is quickly degenerating into centralized control? First came the adoption of KYC and AML regulations by major exchanges. This came in concomitant, I think that's how you say that, response to the Wild West unregulated exchanges that were prevalent in the first 7 years of Bitcoin that resulted in hacks, frauds, and defaults. Yet, the regulated exchanges have only enabled fraud liquidity in a different form of DeFis and NFTs. In the same period, exchange innovations emerged in a truly free market that threatened the very existence of regulated legacy exchanges, leading to civil and criminal prosecutions for those innovators who refused to comply with legacy exchanges through the commodity industry stacked regulators at the CFTC and enforcement arm of central banks through the Department of Justice. And of course, I'm referring here to the regulation of the CFTC crackdown on BitMEX and Arthur Hayes and the Bitcoin 4, and of course then the criminal indictment that was also instigated, because of the powers of the central bankers. Mm-hmm. There's no question of that. Second came the declaration of Bitcoin as legal tender, clearly putting Bitcoin in the political arena. And third comes the regulatory approval of ETFs. So these are all things that happened in 2021, and they've all three have encouraged institutional participation. If you're going to play the Bitcoin game, you have to, and you want to move in and out of the legacy systems, you got to play their game. But institutional participation is not inherently bullish for Bitcoin. Now, everybody seems to think that it is, but quite the opposite is the case. Bitcoin's designed to work well apart from legacy systems. The legacy participation in the last half of 2021 and the first quarter of 2022 quickly changed the fundamental market structure and dynamics of Bitcoin. It does not necessarily follow that legacy system Bitcoin participation bodes well for Bitcoin or for sound money. By definition, Bitcoin tied to the legacy system defeats its primary imputed value, that it cannot be seized. Or, as my good friend Tone Vays puts it, Bitcoin is unconfiscatable. Any Bitcoin that you have on a regulated exchange, or not your keys, that can be confiscated. Particularly, again, it used to be it would be seized through the dishonest players in the marketplace, but now the big risk is this is all being transferred, so it's part of the legacy system. And the great deception that we're exposed to now is the governments can just simply seize your Bitcoin. And believe me, anybody that's playing the legacy system will give it over in a heartbeat. By definition, a legacy hodl is part of the legacy system. Legacy players will give up this legacy hodl to the prevailing authority in a heartbeat if it's to their advantage. Not your keys, not your Bitcoin is applicable for Bitcoin held under the regulation of legacy jurisdiction, and marks a fundamental shift from Bitcoin as an independent entity free from confiscation and regulation to a commodity wrapped in regulation and easily seized by central powers while increasing fraudulent practices, which regulation is supposed to reduce but never accomplishes. And we've seen that with these NFTs and Wi-Fi. Sound money can be restored with national jurisdictions by an end run around Bitcoin if there's a political will to do it. A private Bitcoin standard competing with a fiat gold standard will be a very healthy development and can change the paradigm towards competition in currencies and denationalization of money for generations to come. It is market forces between two competing standards that are the catalyst to keep both strong. Yet a de-evolutionary trend in the Bitcoin standard is presenting itself at an exponential rate when compared to the de-evolution trend of the gold standard that reached its most advanced level of development in the Gilded Age in the late 19th century, and it's declined ever since. While technology, and there's a history of money. I did come out with a new book, guys, if you want to see that history of how it's devolved ever since we nationalized the gold standard. It's a fascinating history. While technology provided a new tool that is secure, easily transferred through national borders, unconfiscatable so long as you own the keys, censorship resistant, and decentralized, these innovative attributes are being quickly undermined by those who know or should know better. Bitcoin legacy players render Bitcoin unto Caesar. Through legacy participation and Bitcoin legal tender, Bitcoin hodls are rendered unto Caesar. Not your keys, not your Bitcoin, has huge implications. While technology provided a new tool that is secure, easily transferred through national borders, unconfiscatable so long as you own your own keys, censorship resistant, and decentralized, these innovative attributes are being quickly undermined by those who know or should know better through legacy compromise. The future value and strength of Bitcoin will not come from Bitcoin legacy players, but in spite of them. And navigation between both worlds will be a future challenge for non-legacy Bitcoin hodlers. Legacy players, institutions, and governments will likely play the hand they are holding. Hint, it's not Bitcoin. Now, maybe it will be if we give all our Bitcoin to legacy institutions and they seize it, but right now that's a new thing that's happening. It's a very worrisome trend. The asset that legacy investors are holding is not Bitcoin. It is the partnership through licensing and corporations, compliance to regulation, tax collections, tax favors, fiat money access, and other privileges that only legacy participation provides in particular jurisdictions or nation states. And this is what Bitcoiners seem to be seeking after when they've been given this wonderful gift and they're throwing away much faster than they were 140 years ago. The bottom line is that legacy participants' first priority is to perpetuate their legacy partnership and privilege. The first priority is to the grantor of the privilege. The legacy markets are free only within the chartered parameters granted by each jurisdiction, which means legacy Bitcoin hodls are ultimately used as a way to pay homage or tribute to those granting such power. And sadly, it is the same legacy privilege that Bitcoin legacy players now seek. Bitcoin legacy players seek Bitcoin legacy privilege. The legacy system can impose a gold standard. Legacy systems have the power to impose gold as the legal tender standard. And because governments hold gold reserves, it is in their interest to do so. By doing so, the shift will not be from gold to a private Bitcoin standard, but rather Bitcoin to the more useful public gold standard by playing or threatening to play the gold legal tender card. Again, they don't even have to play it. I think what you're going to start seeing in this coming year, we're going to see the effects of this money creation that we had, and the only way they're going to be able to get it under control is restore the gold standard. Even threatening to do so is going to have wide implications on the market. Competition in sound fiat money complements Bitcoin in that stable jurisdictions will provide areas where new wealth can be safely created. At the same time, Bitcoin acts as the governor or arbitrator between national jurisdictions. Now, I will kind of footnote this. Since I've written this article, I watched some people that are behind the new regulations, and they're saying, well, we have to do this to accomplish these ends. You know, they may be right, but boy, we got to be careful on this thing. I mean, I understand the argument. I understand, hey, you know, we've got to play the game if we're going to make it work. But, you know, it comes to the old question again: do the ends justify the means? And I think we're going to have to be real careful in the directions that we go in this coming few years of transition. While it may appear such a paradigm shift is unlikely, it cannot be ruled out and should be considered in risk management modeling. If the carnage from the current economic train wreck continues at the current pace, the legacy players will have no other viable option. So I think it's very likely to see a gold standard return, or at least the threat of it. And you know what? If they return it, that's not a bad thing for Bitcoin. Moreover, such a shift is a win for sound money and a win-win for the Bitcoin standard and the gold standard. I mean, what a wonderful thing we will have if we have two competing sound monies. If we just had sound money to begin with, Bitcoin was never necessary. But now we understand that we need Bitcoin. I think the biggest thing that Bitcoin can do is it's the opportunity to bring back competition and government honesty, if nothing else, and sound money. And I think that's the win-win, that both of these standards develop. Basically, the gold standards for within nation states, and Bitcoin is the fuck you money, the escape money that you have. A competing fiat gold standard is the foundation for a new America. For the first time in history, a government is no longer needed to defend the Bitcoin nation property. This property is defended by its citizens with each movement within the nation. We are the new America. Every time we do a Bitcoin transaction, we're making it more sound. We're making it work better. We are the new America because we can safely save for the future. And how much safer it will be if we can save both within our national jurisdictions. We know that money is good, and we also know that, hey, if the government screwed up, we have our Bitcoin, our escape money. I think it's a wonderful, this idea that the Bitcoin is going to become the new world currency, I don't think it's healthy. I don't think it's going to happen either. I don't think that's what Bitcoin is really all about. I don't think that's what we want it to be about. We're the new America because we can safely save for the future. The Bitcoin standard will become the new standard without a nation state, without location, without jurisdiction. Yet the presence of the Bitcoin standard will influence culture, future fashion, and future morality. The new America will be both loved and hated. Loved because it is the new shining city on the hill for all to see, and hated due to the envy of its success. So the countries that don't envy Bitcoin but embrace it and embrace sound money and restore a gold standard, which they can easily do, that's also going to attract Bitcoin because, and that's fine. I can do business on a gold standard. I don't have to be doing business on the Bitcoin standard. I think what happens is we'll wind up having the choice of doing both or either. Its citizens will be both celebrated and persecuted. Because the new America has no land, no location, its citizens will be both welcomed and persecuted in the jurisdictions where they choose to reside. The only way to attract or attack the new America is to attract or attack its citizenry. And that's what we're seeing. The governments are, to various degrees, attacking their citizenry. And it's happening it's happened in the United States particularly. It's also starting to happen here a little bit in Mexico. This means as responsible citizens, we will watch each other's backs in the face of unwarranted persecution. This also means as Bitcoin entrepreneurs, we are responsible to be the very best we can in our chosen professions. I mean, basically, we want to be good citizens. Whether you're a world-renowned master chef, a fashion designer, electrical contractor, a house builder, website designer, a physicist, a doctor, ugly old god. I've been reading, rereading the book The Making of the Atomic Bomb, which is by Richard Rose. What a great book that is. I do recommend it if you haven't read it, guys. I'm reading it a second. Actually, I'm just listening to it when I sleep. But it's a great book. And it kind of, it's very relevant to Bitcoin because it shows what these brilliant scientific minds, how they developed the bomb. Now, they did, it was a nationalized thing, but the trends, why they had to go secret, and they actually there was a big debate. Hey, we had this open community but then they realized we can't publish these papers and let Hitler get a hold of it because he'd use the bomb to destroy the world. So, these are not easy questions. I don't claim to have the answer, but I am trying to expose trends. And the restoration of fiat gold standard provides stability to accomplish these goals within the legacy jurisdictional boundaries of competing nation states by ensuring the integrity of the new gold standard through freedom of asset movement hither unavailable. We couldn't escape now, but you couldn't, Franklin Roosevelt, he seized all the gold. Well, that's not going to work again. People have it, and they're not going to turn it in. It's legal to own now. But again, a lot of the banks and also the boomers, they own gold. They understand what it's there for. You've got people all over the world, but they still own gold. Gold is not going to go away. It's not going to be any less money. It may not be any more money, but I think it's going to resurrect itself, and it's invariably is going to have to. I mean, the other alternative is we're going to get on a Bitcoin standard, which I just don't see that coming. I think there'll be a Bitcoin standard, but it's not going to be within the national jurisdictions, except maybe isolated cases. I mean, I really do hope that El Salvador will become the new Hong Kong or Switzerland of America. That'd be great, but I don't see that happening.
The new Dubai? The new Dubai?
No, well, I don't think Dubai. I think more Hong Kong. Personal wealth can readily be free from the tyrannical holocaust of a bad acting nation state. Rather than doom and gloom, competing sound money standards provide hope and new wealth. Okay, so the article is that gold is the new hyperwave. And so what is a hyperwave? Well, it's a concept that was visualized and fully developed by my good friend Tyler Jenks. And it was actually first conceived by Ted Warren. A lot of people did not know that, but he was one that, but Tyler, he said, he says, I'm a big Ted Warren fan, and he understood what the hyperwave was. He outlined it, but he didn't call it that. But it's basically the same premise. And Tyler took it to a whole new level. He did what is called consensio and moving averages. But it's based on the premise that certain conditions preclude the rare times when markets go hyperbolic. Such conditions do not mean the market will necessarily go hyperbolic. So it doesn't mean that we're going to go into a hyperwave, but all the conditions are bad. Only that it meets the conditions, so it's possible to do so. I'll outline why this is so. Tyler Jenks developed the proprietary technical system of Hyperwave in 1979 and continued to develop it for the next 30 years. And in his book, now this book was actually written by Socrates and Leah Wald after Tyler passed on, but I think it did capture the basic concept of what Tyler visualized as hyperwave. It can be characterized as a chart pattern, but it's also much more than that. Hyperwave is a social phenomenon, and that's what Bitcoin is. Right. And it is an expression of a macroeconomic shift. On a psychological level, hyperwave is a simple model to explain what happens when people refuse to allow the numbers to add up. Microeconomic shifts are extremely rare, therefore so are hyperwaves. We are currently experiencing more hyperwaves than at any other point in recorded history. So we are likely undergoing the largest macroeconomic shift that has ever occurred. I mean, other microwaves are like Google, Tesla. Theirs is basically it's a seven wave It's very, very simple, but basically once you establish that 1 and 2, you go into 3 and 4, that goes into the hyperwave. And because we're living these inflationary times, we're seeing more and more of them develop. Bitcoin is definitely a hyperwave, and I think gold is going to also become one, because I think it will resurrect itself. It's important to understand that hyperwave is not dependent on price, whereas most other technical indicators are, such as moving averages, stochastic oscillator, moving average convergence, MACD, or the TD sequential. All those indicators need a price input to provide an output. Hyperwave tells us exactly what pattern, it's a pattern, what pattern the price will follow before the move even begins. A hyperwave has 7 phases, and before one forms, this is what it will look like before it ends. Hyperwave is the only technical system that projects the pattern. Hyperwave does not provide a price target for phase 4, and it does not tell you how long it will take to get there. Incidentally, this book is available. There's links to it. You can get it on, I think it's under $10 on the ebook, or you can buy the paperback. It is a worthwhile. It has a lot of just, if you want just basic information on technical analysis, it's a very good book for that. I think Socrates did an excellent job of outlining, without, very inexpensive. I've spent thousands of dollars on learning different technical approaches, but this one kind of outlines most of them, and costs you little or nothing to get that information. Now, my background, the coming macroeconomic shift, my background is economics, not programming. It is the macro fundamentals that got me into Bitcoin in the first place. It is the same fundamentals that are in place today, just as they were 3 generations ago. It is these fundamentals that, apart from Bitcoin, that bring Bitcoin into the big pictures, and these fundamentals distinguish the forest from the trees. So I'm going to go through the fundamental case rather than the hyperwave case. As Bitcoin standard bearers, we sometimes lose sight of the underlying forest of fundamentals. It is easy to get lost in the latest chatter, exciting Bitcoin innovations, or dumbstruck by the corruption rampant in the crypto world. But long before Bitcoin existed, there are underlying festering fundamentals that we can ignore only at our own peril. Now, my mentor was E.C. Harwood, and 2 generations ago, he wrote a book called The Money Mirage, and outlined the 3 greatest swindles in the history of mankind. And he defined the term swindle as follows. The word swindle is the usual name for obtaining money through deceit. The key elements of a swindle are that money or property has been taken from someone with or without his explicit consent, and that the person has been deceived or somehow led to believe that his money or property either remains safely in his possession or would be available to him in the future. Now, Harwood goes on to outline these 3 great swindles of all time. And he called them the inflating swindle, the Social Security swindle, and the SEC swindle. Now, this was written in 1974, and since this time, of course, we have socialism and government intervention has just grown exponentially. We had a hyperwave in government regulation and entitlements. So I've kind of revised it a bit. The inflation swindle, that pretty well speaks for itself and doesn't need changing. But I changed the Social Security swindle to the entitlement swindle. At the time, Social Security was the biggest entitlement. And now it's still one of the largest ones, but there's so many other entitlements that I think you can put any entitlement as being a swindle, because basically it's stealing from wealth of individuals to benefit those closest to the inflators. And then the regulation swindle. Now, these swindles are not derived from private corporations or individuals, but from government public policy. Now, that does not mean a lot of corporations and individuals do try and influence government so it favors them. That's part of the game, unfortunately. While there is a great hope by a new generation with Bitcoin due to it being the longest chain secured through proof of work with a limited fixed supply, trustless, borderless, unconfiscatable, mankind's corruption, exacerbated by inflation, has no sign of abating. And as E.C. Harwood put it, perhaps the principal influence accounting for the simultaneous flourishing of the three greatest swindles is the prolonged inflating since the 1930s. Andrew Dixon White pointed out many years ago that in times of inflating, many, if not most persons, lose all sense of integrity, that fraud, swindles, and chicanery of all sorts grow like fungus on a muck heap. What an incredibly rich muck heap and great inflating, the great inflating has provided, nourishes forces that may destroy civilization. And guys, we're seeing that now. Bitcoin has started a new community that has integrity, and we have to set ourselves apart from what's going on in the world. And we need to be that new shining light on the hill. And I think that Bitcoiners, for the most part, are. I think Bitcoin gives us a lot of hope on that. The point is that any hope that government will provide any investor protection through stimulus checks, entitlement programs, or regulation is severely misplaced. And I think, if Bitcoiners, the Bitcoin legal tender and the Bitcoin, what do I call that, the Bitcoin crony capitalists, they're falling for the same old, guys. And we have to have a fundamental change in our outlook. I'm not saying all of us have done that, but we all know who we are. And to some degree, we all do. Every time, to a degree, I'm a trader. Well, every time I put Bitcoin on a regulated exchange, I basically have given up that Bitcoin. It's not my keys, not my Bitcoin. Government is the root cause of our monetary problems, not the solution. Bitcoin is a useful tool, not a panacea, and like any tool, it can be useful or abused. Almost certainly, the trends now apparent will be a challenge to reverse in your lifetime. And guys, this is your battle. I'm 72 years old. I hope I have another 10 years, 15 years. I don't know if I want 20 or not, but I do have, my daughter just turned 10, and so I hope I'm around till she gets married, and if I do, I'll be quite happy. But this is not my battle. I'm doing this because I believe in sound money. My little bit of legacy, the little bit that I know of, I hope to pass on to you. I'm not a programmer. I'm not in the category of so many of these, what do they call it, the original founders of Bitcoin, I can't remember the name, but basically the Adam Backs and the Austin Hills and all these developers. What they've given us is just tremendous. And but in Bitcoin has provided opportunity to change for the first time in 4 generations. And I see this, and I know a lot of you guys, if you're in Bitcoin, you see it. And I want to encourage you. I'm not here I'm here to encourage you and not to blow smoke or discourage you. Say, oh, you can't do this or you can't do that. I just think we need to put a lot of thought in what we're doing. Some of these things that are going on, I get it. What's going on down there in El Salvador. Well, you know what? How can I be against Jack Ma's enthusiasm when I see a young man like that, and he understands the markets, and he's doing what he thinks is right. Now, I can question it, and I think that we all need to, and I think he's been very open to that. So right now, I think you couldn't have a better group of people. Man, I don't know about the other things going on there, but I think as far as what they're doing on Lightning Network and trying to circulate Bitcoin as sound money down there, I can't do anything but encourage that. By the 19th century, with the development in methods of communication and simultaneous development of sound money, sound commercial banking, non-inflationary purchasing media, commercial paper, was created by private U.S. banks representing new goods being offered in the marketplace, redeemable in these new goods as well as gold, which incidentally, that is what I think needs to be for Bitcoin to really blossom. We're going to have to develop free market banking. And right now, we don't have that. In fact, what we're doing right now is because of regulation, because of tax laws and all that, people, the recommendation of Michael Saylor and others, don't sell your Bitcoin, don't pay those taxes, borrow against it. Well, and that's fine, but boy, if you borrowed against your Bitcoin was $60,000 and it's worth 40,000, that is kind of an expensive loan. So it's not. What we need to be doing is circulating Bitcoin on the Bitcoin standard and have that Bitcoin represent make it redeemable and the new wealth coming into the market. And that's what the innovation of sound commercial banking was, in the Gilded Age. U.S. private banks provided the innovation of creating non-inflationary purchasing media to entrepreneurs and commercial enterprises, producing goods being offered in the market, which was then used to pay workers and suppliers, who in turn used this new purchasing media to buy the new goods being offered, including new gold production. The newly created goods acted as collateral for the money creation. The newly created money was not created ex nihilo. The newly created money represented new goods produced by commercial enterprises, and as these goods were sold in the marketplace, the newly created purchasing media was retired. We're not doing that yet. At best, what we're doing is we'll deposit your Bitcoin and we'll loan you money again, but we're not creating new wealth under the Bitcoin standard. We're just playing the inflationary game and trying to survive, and I get it. These are difficult times. This is the classic gold standard developed organically by the private sector that learned through the development of sound commercial banking how to expand and contract the money supply in an honest and fair manner. As the new goods were sold in the marketplace, the banknotes were retired, hence non-inflationary money creation. This was such a successful model. The process was repeated time and again, creating what is known as the Gilded Age. The idea that the 19th century bankers profited from interest collected from money created out of nothing, like modern bankers, that's canard. It's a widely held false belief. These bankers innovated the concept of monetizing production in new goods. That's what we need to learn to do, using gold as a clearing standard and earn interest on the innovation by providing this service to producers. This is what we will need to do on a gold standard again or on the Bitcoin standard. If a bank was suspected of creating banknotes ex nihilo out of nothing, or if it was thought they overvalued new goods produced by issuing too much credit, i.e. financing buggy whips in the new age of automobiles, their banknotes were redeemed for gold and the ability to make new loans curtailed. The U.S. economy grew at a pace never before known and never known since, and without a nationwide financial crisis or recession. Gold acted as a decentralized governor or governance system by which all things in the marketplace were measured. In Bitcoin lingo, the classic gold standard was built on a multitude of centralized side chains indexed to gold. Gold was a decentralized standard used by these centralized side chains to settle accounts and acted as a governor of credit expansion. The creation of non-inflationary money was fine-tuned in an unfettered banking environment, not by Keynesian or monetarist economists who at best think they know better, or at worst are stooges for crony capitalists. The gold standard was simply that, a standard. Gold acted as the decentralized governor or governance system of the banking system in which each participant was decentralized. It was not a 100% gold standard described by gold socialist Murray Rothbard and others, but a dynamic living economy of non-inflationary money creation and retirement. There was no political agenda or magic macroeconomic formulas for its success. The miracle of the Gilded Age in the United States was due to what E.C. Harwood described as the lost art of sound commercial banking, and is the furthest advance in history of sound money and banking. Bad loans resulted in the loss of gold reserves. There was no central bank, but bank clearinghouses were formed to hasten the retirement of newly created banknotes as the goods they represented were sold. It is this classical gold standard that was co-opted with the creation of the Federal Reserve. And it is this model that will be revisited if there is to be a Bitcoin standard. When a bank or a company went out of business in the 19th century, all the paper money it had issued became worthless. But people had a reluctance to throw it away because it's kind of like shitcoins. Once it became, because it once had been worth something, so they stuck it in their attic. And as a result, those banknotes, those banks that went out of business left many notes that are in collections or in attics. So
kind of like your flag here, right? Because this paper money.
Yeah, this is all paper money. We made an art out of it. Hopefully, this is a collector piece because it's an American flag. This is made out of. That's a good analogy. This is made out of Venezuelan money. I don't know how many millions or billions is there, but so exactly what. But even these, might be a collector's piece someday. For people that collect paper currency. But the ones that were the sound banks, and most of them in the free banking area, there were very few banks that went under. And the ones that didn't go under, those are highly prized notes because they were almost all retired. So they were very rare items. Wow. In contrast, the vast majority of banks did not go out of business and eventually redeeming the paper money that they issued. So the notes of these banks are extremely rare. Now, this was the market origin of non-inflationary self-liquidating paper. And here's a picture. The success of this 19th century innovation is evident in that banknotes issued by men of integrity are rare specimens indeed. Not because there's a shortage of the issue, but because the vast majority of the issue were retired and redeemed. And here's one that actually has been graded by one of these new collector societies, and you have to pay hundreds of dollars to get them graded like this. I don't know what this note is worth, but it's worth a whole lot of money because it's a genuine collector's piece. There's hardly any around because they were all. This was a $1 note. And these were all issued, but they were all redeemed. Now, the ones that went out of business, they're stored in attics, but this was one that the bank, survived. It's probably still going on today, and it's interesting to see that. But these are genuine banknotes. Above, it's an extremely rare banknote issued by the First National Bank of Brownsville, Nebraska. This bank is rare because of the vast majority of private banks retired to redeem their commercial paper. These were redeemed, so there aren't many around.
Wow, that's nice.
My point is that, like the Bitcoin standard, the gold standard emerged organically in the free marketplace only after it became evident it worked well, that it was nationalized and regulated. And that's what happened when they nationalized, of course, made the Federal Reserve. They adopted, nationalized a very sound money system. We now have 3 generations since the nationalization of the gold standard through the creation of the Federal Reserve in 1913. And you see how the dollar's deteriorated there. Okay, the decade base for gold. Now, with the spending and corresponding price inflation rampant, traditional gold bugs are frustrated with gold performance. While it exploded out of the chutes in the aftermath of the COVID panic in March 2020, breaking gold to under $1,500 and subsequently rallied it to over $2,000 in August. Since then, the price performance has been disappointing. Yeah, and I've been bullish ever since August of 2020. The poor performance of gold has surprised me too, but in retrospect, it's not. Gold takes time to catch up. You see other things go first, and gold's usually the last thing. This is especially compared to the explosive rise of Bitcoin from the low of $4,000 to $12,000 in the same time frame. But failing to grasp the true innovation and game changer Bitcoin, gold pugs have been bystanders and watched Bitcoin exceed $60,000 and maintained a benchmark above $40,000. Has gold lost its luster as a store of value? Well, hardly, and that's a pun is intended, because gold is hard and Bitcoin's hard. Bitcoin's a little harder than gold, a lot harder than gold. But gold is hard money. It's sound money. Below is a long-term monthly chart of gold. Now, what's significant here is that there is a decade-long cup and handle formation, or in terms of hyperwave theory, it's a foundation. The August 2020 breakout to new highs qualifies hyperwave, the hyperwave leg 1, while the 1.5 years sideways here qualifies as hyperwave. That's a misspelling there, I have to correct. Leg 2. A breakout into new highs will confirm leg 3. So basically, we get above 2,000 again, and I think we're off to the races. Can you scroll down?
Yep.
All right. So here we go. This is what we look like. There's a cup and handle pattern. That's where I think we are. We haven't broken out yet, but it will be confirmed. We get above 1,900 and then above 2,000 is pretty well confirmed. A cup and handle, often abbreviated C and H, is a bullish continuation pattern and is very well suited for timing entries in phase 3 of a hyperwave. An entry is triggered when the price breaks through horizontal resistance, which represents the brim of the cup and the top of the handle. Once confirmed, a cup and handle has a 62% chance of reaching its target. The target is measured by adding the depth of the cup to the top of the brim. Okay, and again, I'm quoting Tyler Jenks again, and also Socrates, who is Tyler D. Coates, and Leah Wald. The Bitcoin standard versus the gold standard. Now, there are differences between the Bitcoin standard and the gold standard. They are both dynamic, but in different ways. They are both sound monies, serving different functions, and they should both be embraced for their respective use cases to further competition in currencies. It is a mistake to dismiss either or to put them in the same box. Okay, free market digital money, Bitcoin, is sound because it is the longest chain. Well, that's another misspelling. I need to mark that. The longest chain with proof of work. There is a fixed supply and it cannot be seized. It is borderless and it is centralized, making it a useful mechanism for settlement, but not much use as cash or short-term store of value. Bitcoin is digital without physical properties and an inelastic supply. Gold is a physical commodity with an elastic supply but with a low stock to flow. Again, I've written articles on stock to flow, which are linked there. Again, all these links are worth pursuing. If you go and study this article, it'll probably keep you busy for an hour. Gold has far less volatility than Bitcoin and has an unmatched track record for money that transcends civilizations. While use of gold as money is hardly a new innovation, the gold standard was a new innovation that emerged in an era of relatively free market banking. And while gold cannot be traced to an anonymous discoverer, the gold standard can be traced to Adam Smith's invisible hand of the marketplace. As the gold standard emerged, there was no fractional reserve gold standard decreed by governments. The money supply was determined by banks, creating a non-inflationary, self-liquidating commercial paper that represented an estimate of all the production, including gold, coming to the marketplace. Gold simply acted as the governor when the market participants perceived those individual banks overestimated the value of the specific underlying production. It was only later, when the gold standard was nationalized, that governments decreed fractional gold reserves, creating the business cycle by perverting the sound commercial banking that organically evolved in the marketplace. Conclusion. A move to all-time highs in gold will confirm a phase 3 hyperwave for gold. The minimum price objective is $3,600 according to the cup and handle formation. However, hyper theory has no upside target, and that's really important to remember. And particularly in these hyperinflationary times, it's going to be hard to measure what are upside targets. Well, there's no upside target unless the governments restore a gold standard. And then all of a sudden things will start making sense again. The luster of gold is likely to return with a vengeance in 2022 due to the fundamental Bitcoin shift from the economic stage to the political stage of development that emerged in 2021. So I think there's a good case for this, and a lot of it's actually the Bitcoin standard movement itself that is going to be the catalyst to restore the gold standard. Because we've moved in a direction I think is questionable, but we really have no right to complain now if governments decide, well, you know what, we don't have Bitcoin, but we certainly have these gold reserves, and I think that would be a very positive income. But I just hope others will within the Bitcoin community will support alternative sound money, even if it's gold. And here's a book that I recently published. It's How to Put Yourself on the Bitcoin Standard in One Easy Lesson. A lot of material there. I only have it on Amazon. I'm charging like $70, $80 for it. If you want it, it's a way you can support me. I'm actually be putting it in a package. You can get it with a bunch of other things for much less. But I've just started. This is my first book. I'm going to be writing one on trading. But if you want to support, what we do here, go to the Ugly Old Gold website. Will instruct you how to become a Bitcoin member. I publish all my trades. I have not been a successful trader this year, guys. I've been a successful trader in Bitcoin every year since 2013. Now, I have been successful in the fact that my net worth has gone up, but as far as trading in the markets this year, I have not. Last year, I ran like $8,000 and $1.5 million, and this year I lost several hundred thousand, I think. So it measured in dollars. But anyway, hope you enjoyed this. There's a lot of information here, and we're back in the saddle. We'll be doing, stay tuned. I'll be doing other read-throughs of my articles, and hope to have a very productive 2022. Thanks for tuning in.
Bye, guys. See you.